you something most traders never understand. Not in 1 year, not in 10 years, not in an entire lifetime of staring at charts. What you're about to hear isn't a strategy. It's a blueprint of how smart money thinks, how they hunt liquidity, and how they trap 90% of traders before the real move ever begins. Welcome to the Michael J. Huddlestone Fan Zone. Retail traders think they lose because of poor indicators, bad entries, or emotions. But that's not the real reason. They lose because they walk straight into a trap designed long before they even open their charts. Let me explain. Every market, whether it's NASDAQ, gold, EUR, USD, or cable, revolves around one thing: liquidity. Not news, not indicators, not your feelings. Liquidity. That's the fuel smart money needs to move price. So what do? They build a narrative, a storyline, a picture-perfect formation retail traders cannot resist. They let you believe a breakout is real. They let you chase the candle. They let you think you're early, when in reality, you're late, painfully late. The three-phase trap. Every major move begins with 3 phases. If you learn these, you'll never look at charts the same way again. Phase 1, the setup. This is where smart money forms equal highs, equal lows, and clean liquidity pools. These aren't accidents, they are magnets. They pull in retail traders like lights pull in insects at night. You think price is consolidating. Smart money thinks, perfect, the herd is gathering. Phase 2, the false break, the Judas swing. ICT calls this the Judas swing for a reason. It betrays you. Price will break in one direction first, fast, dramatic, convincing, and most retail traders fall right for it. They see a breakout. Smart money sees trapped liquidity. They see confirmation. Smart money sees orders to harvest. They see opportunity. Smart money sees a meal. Phase 3, the true move. Once the stops are taken, once the emotional trades are filled, once the breakout traders are locked in, then, and only then, the real move begins. This is the move you always tell yourself you should have waited for. But by the time you realize it, smart money is already halfway through the displacement. Why most traders will always lose. Let me tell you the uncomfortable truth. Most traders will never win consistently. Not because they lack skill, but because they don't understand timing. ICT says it all the time. Not all times of the day are created equal. Liquidity forms at specific sessions. Asia sets the trap, London raids the pockets, New York delivers the kill shot. But retail is busy trading at random hours, chasing random candles, hoping for random results. And the market punishes randomness. Smart money doesn't punish retail. Retail punishes itself. How smart money thinks. Here's what institutions really care about. 1. Where are the stops? Above obvious highs, below obvious lows, at trend line touches, at breakout levels. They know where you hide. 2. Where is the liquidity? Where are the clean pools? Where is the imbalance? Where are the unmitigated orders? Every candle is a clue. Every wick is a message. 3. Where is the pain point? Yes, the pain point. Smart money moves price where it hurts retail the most, because pain equals liquidity. If retail is short, price goes up. If retail is long, price drops. Market moves are not random. They are engineered to maximize pain before delivering profit. The pattern. Every winner knows there's a pattern ICT teaches that almost every successful trader eventually masters. It's simple, but deadly effective. It's called the liquidity grab, displacement, retracement, expansion. Let me break it down. 1. Liquidity grab price takes out a clean high or low. This is the Judas swing. This is the trap. 2. Displacement. A violent move in the opposite direction. A candle that screams, smart money just entered. 3. Retracement to a fair value gap, or OTE. This is where professional traders load up. They wait for price to return to the imbalance, not chase the candle. 4. Expansion. The final, smooth, directional run. This is where profits are made. This is where retail says, "Why didn't I hold longer?" Because retail trades emotion. Smart money trades logic. Final message, folks. The market doesn't hide the truth. It reveals it slowly to those willing to stop chasing and start understanding. Every losing trade you've taken, every frustration, every moment of doubt. It wasn't because the market hates you. It was because smart money knows exactly how you think, and it uses your reactions against you. But not anymore. Not if you study this. Not if you learn timing, liquidity, and narrative. You're no longer the prey. You're becoming the hunter. Welcome to the Michael J. Huddlestone Fan Zone, where retail wakes up and smart money gets exposed.